Greetings, this is Dr. Jeffrey Scott. This is my Market MRI Pro update for October 28th, 2025. Sorry I haven't been around much. I just got back from medical meetings in Germany and in New York, and then I had my live seminar down here in South Florida on what was not a sunny Florida weekend. Um, Thanks again to everybody that showed up live. It was really a great time, and to those that were live online, equally as important. Um, I really enjoyed it, and I did send out to the folks that are meeting attendees that will be doing the options program on Saturday, but that is a closed program for attendees only. Um, my title here is not as good as indices suggest. So why did I put that? We had horrible breath on Tuesday. Um, we're going into the best 2 months of the year. We're likely to see a rate cut tomorrow, highly likely to see a rate cut tomorrow. The, the tech sector looked great today. NVIDIA all-time highs or in all-time high territory. Um, but overall, the markets more were negative than positive. So be interesting to see how the market responds to the rate cut. So again, my name is Jeffrey Scott, marketmripro@gmail.com, Google Group Top Down Trader, and Market MRI Pro is my email, is my website rather. I'm sorry. As always, for educational purposes only. Everything I talk about should be taken in the spirit of education, not investment advice. I do these videos to show you how I use my tools for top-down analysis. You and you alone are solely responsible for any trades you make. I may own intent to buy or sell any stock I mention. Trading stocks and options should be considered risky. You should always consult with your financial advisor. I've got tools in multiple platforms. But regardless of platform, I'm creating them the exact same way. My Google group is called Top Down Trader. It's free, and you get discounts on my products. You get invites to private meetings, and you get a vehicle where I communicate on a regular basis. And sometimes when I can't do an audio, I will do a video blog or a written blog with cutting out charts with marking them up, which I did last week. Again, thanks to those that came live. If you like these videos, why don't you hit subscribe? Why don't you hit the alarm so you get notified? Better yet, join my Google group. And if you want to help brother out, I need to get more people. I need you to hit the up arrow, up thumb, excuse me. And if you got something good to say, put it in the remarks. Even if you got something bad to say, how can I get better if you don't give me feedback? And if you don't want to put it in the remarks, then email me at marketmripro@gmail.com. So we had another week of missing information, which are all the asterisks. Consumer confidence actually came in above forecast today, which was good. We won't get a lot of the data tomorrow, but we will get an FOMC rate decision and a Powell press conference. I think that's going to be interesting. If it's not a 25 basis point cut, I'll be shocked, but it's what he has to say about the pace and speed of cuts. 50-point basis cut will scare the market, and no basis cuts will piss off the market. So I think it's 25, and we hear what he has to say. We won't get jobless claims and GDP on Thursday because the government's still shut down. And we won't get the PCE complex and others on Friday for the same reason. What we will get this week is a ton of earnings, and they have only just begun. TER up 21.8% after hours, Bloom Energy 19%, NBR 10.6, ZWS 5.8, Seagate 4.3 were some of the big winners on earnings. After hours, LRN was down 37.6%. Yowzer. DRNS down 32, Enphase down 9.6. So mixed on earnings, but some really big winners are snuck in there. Look at the rest of the week. Meta, Microsoft, Alphabet, Chipotle, Carvana, ServiceNow, all at after the close on Wednesday. Lilly, Merck before the open on Thursday, Roblox before the open. Then you got Amazon, Apple, Coinbase, Reddit, and then you got some energy and others on Friday. It is a judgment call to hold the stocks over earnings date. It is bad judgment to not know when your stock's earnings date is scheduled. For more information, just reach out to me at marketmripro@gmail.com. If you got any tech problems with the program, Praveen at coding at marketmripro.com. And I will tell you that we got a lot of great feedback at the live meeting, and we've already started to incorporate some new features, and can't wait to show people, and maybe some on Saturday, some of those new features. So thanks for all the support, and thanks for being here. Let's go take a look at the markets. All right, so let's go into the daily briefing. And what do we see? We see volatility led to the upside. That's never good, and Bitcoin to the downside. The dollar was down, and then the rest of it is stocks up 0.77 for the leader, which is the Qs. Diamonds 0.38, Spiders 0.27. Um, Russell down 0.54 is the big loser. Again, Bitcoin is down. Now, the new highs minus new lows of 52 weeks nosedive compared to yesterday. This was a horribly weak breath market today. New lows up, new highs down. And if you want to know what bad breath is, um, just look at these three indexes and look at the top bar, which is today, versus the bar below it, which was yesterday. Only 9% of the sectors were up in the S&P 1500. 18% of the industry groups, 26% of the stocks. Most things were down. On the NASDAQ, no industry groups or sectors were up. 26% of industry groups up and 35% of stocks were up. Yet the Q was up 0.77. MAG stocks in charge. And similar on the NYSE with only 33% of the stocks up. So it was a weak day. Leading on a weekday was technology, MAGs, materials up a bit, and discretionary flat. Leading to the downside was real estate, utilities, energy, and staples. So taking energy out because it's volatile for other reasons. The defensive plays were laggards. Now that's interesting because if the markets were preparing to sell off, wouldn't you maybe think that staples would be coming to the top as a defensive play? So maybe from a contrarian perspective, maybe that's a good thing. On the leaders, it's all mining: uranium, silver, lithium, gold, clean tech, copper, and then you get semiconductors. If I flip the story and I look at where the weakness is, I ignore cannabis because they're such low price. Little moves are big percentages. But oil and gas, leisure, China, Norway, blockchain, solar, fintech, robotics, data centers, China. The things that were leading are now the laggards. So it'll be interesting to see um, if we get any follow through to what we saw. And again, I would be kind of um, expecting the market to go down based upon the breadth, and I'll show you some other issues. But we do have earnings, we do have a rate cut most likely, and we do have November and December on the horizon. So that mitigates some of my bearishness. I'm still concerned. Timing model says, shut up, Jeff. Our daily model. You can see green on spiders, green on the Q, green on the diamonds, green on the Russell. Our daily model says it's okay to be long. Short-term timing is still long. Our weekly, it says, it'll take a few seconds to get there, but I'll just tell you right now what it says. It's going to say long. And you could see here, big gap up this week. You wonder if it'll ever fill, and green all over. So daily long, weekly long, and flip for a second to monthly, monthly long. So hard to short here. Um, why do I have a bearish tone? Well, I can tell you that we went from about 12 stocks in the S&P 1500 that have MACD divergences yesterday to 55 to 60 stocks today. So that shows me one thing. Let me show you more. If we look at the US index ETFs, there's one thing that is not good that is in common between spiders, Qs, and diamonds. What might that be? Well, the good news is we're in a powerful uptrend. Woohoo. The 5 and 10-year seasonality is very positive. Maybe a few more days of questionable and then it breaks out. That's awesome. Um, Nothing bearish on the price pattern except to see one, two, three gaps in a row, a doji up at the top, and it makes you wonder if that's going to be a short-term top. Something else that, because it's indecision at the minimum, look at what the high jump is on this bar. It's at 100%. So that's telling me we are the most extended based upon distance from the major moving averages for the spider for at least 1 year. That's meaningful to me. That means the last time we got here, it didn't get more extended, it pulled back. But there's more. If we look at the cues, say exactly the same thing, so let's just look at it. High jump is 100, most extension in a year. Let's look at the diamonds. Diamonds pulled off the highs, still we're up on the day. Seasonality is great. We know that. And what do we have for high jump? 100%. So these three are all max extended. Can they get more extended? Absolutely. But historically, when you get to this point, the rubber band doesn't pull anymore, and you have somewhat of a reversion to the mean. Now, does it have to be a big change? No. It could be a little bit of a sideways move to ease off some of the overboughtness, and then it takes off again. But tells me even if we're up a lot tomorrow, we're just going to get more extended. And that has nothing to do with breadth, folks. If I look at the Russell's different. It's not at all-time new highs. It doesn't have a new gap every day this week. It actually finished lower today. So the Russell's less worrisome on that basis, and you can see the high jump's only 78%. I learned the high jump from Ian. I did some changes to make it an oscillator and have the low jump as well. But one thing I did learn, it's a meaningful signal. VIX came down significantly today. I'll just show you that. And now the VIX is low. Well, when it's up here, it's time to buy. And when it gets down to the low of the year, it's time to go. And we're getting to that point where you get nervous. So I'm also, to be honest, I've also was a little bit concerned and remain concerned why it hasn't gone back to baseline, but it's getting much closer. So I think there's stuff to be nervous about here. Dollar is struggling at the 200, nothing new to say today and since the whole week. On commodities, gold super strong coming down. So is silver. You wonder if they're going to get down to the 50. Oil is struggling at the 200. Natural gas is way broken down. And 10-year and 30 both came down just a tad today in front of likely rate cuts. You want to see neutral? I'll show you neutral. We have some stocks below the Bollinger Bands. We got some stocks above the Bollinger Bands, but we have nothing excessive. So neutral. Market breadth. Well, I see things to worry about. You could see the stocks above the various moving averages, the 20 in green, 50 in white, 200 in red, actually eased a teeny bit today. The new high, new lows we know are positive, although they're less positive than they've been. You can see it's come down significantly. But now the AD lines are negative on a positive day. The up-down volumes are mixed, but even the one that's not negative is barely positive, hardly even registers. Um, Something to be concerned there. If I look at the larger market breadth window, am I going to have to say higher highs and lower 13-week new high low, lower stocks above moving average, lower AD line? Are we having short-term negative divergence again? I think we are. So a lot of things to be concerned about. What I'm not concerned about is the 13-week new high, new low is not at a breaking point. Um, I think that's shorter acting than the high-low jump. But the high-low jump tells me I've got some concerns. Look at the Nasdaq. It keeps getting higher, but the AD line keeps getting lower. What's right there? There's something definitely concerning. And it's interesting. The Russell 2000, the AD line looks a little bit better, although it eased some today as well. So I put all this together with the simple thoughts that day for some of the indices, bad day for breadth, bearish feeling, but I have to be careful to not get too bearish considering we've got the FOMC decision. And as I mentioned, we still got earnings Lollapalooza and we got some great months coming. If we look at the ratio charts, you could see one thing was working today, and that will be technology. Let that load up, take a second. And you could see compared to the S&P 500, everything else came down today. The thing that way overperformed was technology. That's why I do the ratio charts. So I think there's reasons to be concerned about the market. Hard for me to be giving you buys here, but let's just take a look at the top down. The only group showing positive return was basic materials. But Jeff, you just told us that tech led. Well, in the S&P 500, tech led. That's 500 stocks. I have a much broader list of 3,800 stocks that we can look at tonight. And we know that the broader markets were weaker than the S&P 500. So it's no surprise then to me that tech is lagging here. But let's just see where tech is. If we look, it's not even in the top three on the 2-day momentum. So let's look at, you know what, let's do it differently tonight. Let's not look at the sectors. Let's pull up the best performing industry groups and let's go for the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Because I love biotech, I'm going to put biotech in there. That gives me 588 stocks in the leading industry groups by percent move in the markets on Tuesday. Let's trim this by getting a $5 filter into 500,000 shares. And since we're in an uptrend, let's not have any stocks that are trading below the 200. That leaves me 197. Now I could look at by percent return today and start to go through ARQT as a biotech that we have looked at from time to time, and it had a positive earnings for a change, which was a big, well, forget the change, it's a nickel, but it's a big number and it was up a big surprise. Love surprises. Um, I'd read into that earnings report and make sure it's not some weird one-time thing that they made. And oh, by the way, you can download anything here that's in the news and you can get your hands on the presentation by the company. So it's up on earnings. I might want to read about that. That's a pretty impressive move. Look at the volume, CPR, gap volume, breakout momentum. Look at relative strength and OBV. CCJ, I think the news will tell you that they did some kind of an agreement today. Cameco's deal with Trump administration. Wow. And they're like the big dog. Um, deal with Westinghouse and Brookfield. So interesting. Again, how do you buy this here? I would have a hard time chasing it, although this is the hot area. But look at what uranium has done. And there are other ways to play uranium, but you won't necessarily have the Trump deal. Highcroft Mining, I don't know what they mine. Can I find out here? Well, you can read their third quarter 10Q, which came out today. People are, insiders are buying. Repayment of all debt. Huh. Drilling high grade silver and riding gold's uptrend. What do their earnings look like? Oops. So we don't have any recent earnings on them. All right. Well, you just saw it's a miner. Had a lot of popularity. Insiders are buying. Okay. Cheap miner. INBX, a biotech stock with a nice breakout. Not a cheap stock. And again, I don't know every company. I don't know what they do. Top line results from trial of whatever it's called in sarcoma. They also are studying colorectal and another sarcoma. That's interesting. I'd probably, as a physician, maybe do a little bit of reading, but it's gone from 32 to 68. I'm a little nervous on that. Leggett and Platt, God bless you, John Person. This is one of the stocks that he talked about at his live session on Saturday. I had no idea what they did. Um, but they do stuff that's used by data centers, I think was the conclusion. Um, Earnings came out, um, and no, nope, they're not data centers. Rather, I think they make components of furniture, and they're going to benefit. I can't remember exactly what he said, but I think it was the furniture. But they are in aerospace, so all I know is John Person talked about it on Saturday. Earnings came out on Monday. So what did John Person know? The earnings weren't great. The revenue was good. The stock certainly reacted, which tells me they weren't nearly as bad as the market expected, and they rallied on it. VYTK, another biotech. So just by doing what I've done, and I'm not going to keep going too far, here's a smaller uranium play, UEC. Just by doing what I've done, you can now start to go down the list and looking at those stocks who are actually holding up well. Here is a great biotech, a great inventor of life-saving drugs. Fundamentally, their numbers didn't look that great, and they're going to do well. They had earnings today, and it was a positive surprise, even though it's not growing on both earnings and revenue, and the market did well. So I'd have to go back and read their analyst report and get a sense did they raise guidance because best HD sales increase. Well, I would go and read this. This is a premier biotech, and we know biotech has been doing well, and now you got the earnings out. So that's one way of doing top down and pulling up some of the best stocks in the market and seeing what's working and what's not working. Um, Another thing to do is a bottoms up. And so just, I love doing bottoms up, even though I'm a top down guy, because that's where you find the candy. So let's go under the impulse and you could see, let's clear my filters. You can see that I've got almost 3,800 stocks. So I actually have in the database closer to 4,000, but the program automatically cuts anything below a dollar or 100,000 shares for my analysis. Now, because we spent so much time already on the top down, and this is my second take because I had an issue to deal with, I'm just going to show you my favorite scans. One's called the A plus scan. I have combined certain things in the A plus scan. I have combined, um, you have to have the double momentum signal right here. You have to be above $5 and 500,000 shares traded. You need to I believe you need to have both the daily and the weekly bongo with a recent reversal in the daily bongo. And the relative strength has not to be breaking above the moving average, and same with OBV. So Cocoa. I like this one over the weekend. I think we looked at it in the hotel that we were doing our meeting at, and it broke out today. So now I want to go up here and see when earnings are. Earnings are tomorrow, unless they were released today and that we're wrong. So it's next week, so that's probably is tomorrow. Uh, this is pretty interesting looking chart. Here's a stock that has formed a wedge or a flag, and it broke out handedly on decent volume. Volume breakout momentum, relative strength and OBV perking up. With earnings coming, hopefully they're in the morning, and then I can make a decision what I want to do. But I like Cocoa, CYBN. Um, Similar to some of the other ones we looked at, probably another biotech play, registered direct offering, and then illegal. So I don't even look at that after that. JNX, I looked at this because this is one that popped up last week. A nice break above the 200 on massive volume. We talked over the weekend of bottom fishing and what I'm looking for. Well, the relative strength is picking up. The OBV is picking up. I got a breakout. I got double momentum signal. And best in class potential. Well, that's pretty impressive. And a $42 price target and a stock still less than 30. I think this one looks interesting. Nvidia, wow, finally breaking 200. My biggest holding, probably a lot of yours. It's not that I bought a lot of Nvidia, it's just gone up for so long and has had some great splits. But Nvidia, is this going to be a break and go? gap and go, or is this going to be a gap and crap? We'll have to see what happens over the next couple of days. It, like the market, is getting extended. I would certainly expect to see it drift down before it goes higher. Not that it cares what I think. And then Skyworks is another big name. Um, Breakout, I just don't like it. It closed at the bottom, but that looks interesting as well. So this scan is designed to find attractive stocks. Everyone we looked at, except for some of the legal stuff, looked attractive. Then historically, I've looked at pullbacks in an uptrend with in a squeeze and then a breakout signal and or momentum. So ARQT we already looked at. Um, BOS1 Better Online, $5 stock. I don't know anything about it. CCJ, God, I just don't know if you can chase it here. The government, the Trump government does something with them. It has some nuclear energy deals. It looks great. Probably goes a lot higher, but on the fundamental perspective, well, look at the growth rates. Interesting stock with surprises on revenue, surprises, excuse me, on earnings, surprises on revenue. Is this NVIDIA of the material stocks? CYBN we looked at before. XTR, Extreme Networks. I hate these guys because they control my network in my office and I always forget my password. But you can see a big uptrend pullback sitting at free parking, good volume. Again, coming out of a squeeze, relative strength and OBV turning up. I know that because they're both green, all green. Hub, electrical, big bell toll that looks like an earnings day. Open lower, closed much higher when people understood them. $5, 15% growth in a surprise. Revenue, a little bit of a negative surprise. Trades at a multiple of 24. It's come down a lot over the years. And a small dividend. Hubble looks interesting. That is a impressive candle here. Leg, talked about that a while ago. John Person's pick. NVIDIA we know looks good. NXE, Next Gen Energy, pullback, breakout. Corvo, Tech Play. Let's see what the earnings look like. They're coming on November 4th, probably too soon for me to be buying. I really like Regeneron. It made this scan similar to the top-down assessment. You're buying something that's way off of its highs, and that's the negative. But you're buying a premier company, and as we said, I believe earnings are out, which takes away that risk. Skyworks we looked at, and then TERN. Wow, cheap stock. So this move came off at $2, so it's a 400% move. But a nice pullback to the 50 and now breaking out. So I'm not going to give a whole lot of specific suggestions, but hey, this is education only. But notice how I have now simplified my life by creating two scans. We're not 30% of the stocks look interesting, not 70, but nearly all of them. The point here is it's been 28 minutes. I have talked the whole time. It's added 10 minutes to my analysis than if I did it myself, and I'm still done talking and teaching in a half hour. Have a great day in the market Wednesday. I think we got some trouble coming, and if that breath doesn't pick up, a small adjustment and then ending higher in the year still in the cards.